Well, more now on one of our top stories, those latest figures from two key sectors, property and retail, which have raised fears of a slowdown in the British economy.
But it's not the same picture across the whole of the country, as prices in the southeast and northwest of England are bucking the downward trend elsewhere.
Well, with us in the studio to discuss this is James Moss, director of the specialist London-based company Curzon Investment Property. And in our Newcastle studio there is Jeff Graham, managing director of the Durham-based J.W. Wood estate agents. James Moss, to you first, what's your take on these figures?
I think the main thing to grasp about the figures is that the UK is very localised. These figures are very much broad sweeping across the UK as a whole, if you like, one size fits all. And it's absolutely not the case. UK hasn't been like that for many decades now. It's also clear that the economic differences between, say, London and the West Midlands, South Wales, for example, are very, very different. I mean, London's drivers are very much international, very much business, very much finance, restricted housing stock. In other parts of the country, it really isn't like that, and the local drivers are local economic drivers, which are very different. And that basically is resulting in what is becoming a polarisation, once again, between the north and the south. And I think we'll see this as we continue to come out of recession until the country's back on its feet again.
Jeff, would you agree with that? What's your experience in Newcastle?
I do agree that it is certainly regionalised, the housing market, and indeed even within the region I'm finding that there is a variation within different towns and cities, and indeed even down to various streets. The market, without question, is very erratic. It's very, very price sensitive. And the way I would look at it as well is that I would be saying that it is actually almost property specific.
Jeff Graham, can I stick with you on one aspect of these figures, namely that there are more houses and flats on the market, we're told, but people clearly aren't buying them so quickly. Is part of that down to the abolition of the Home Information Pack?
I'm not entirely convinced that that is the case. I think without question more houses have come onto the market since HIPs were abolished. But I would take the view that if any vendors out there who were unable to put their houses on the market because of a £400 charge for a HIP, frankly probably shouldn't be putting their house on the market at all anyway. But there is without question more houses have become available for sale. And yes, there is a greater supply than demand, yes.
James, what about mortgages? Because people are struggling to get the deposits for a mortgage, and now deposits are necessary. How do you think that's affecting consumer
I think it's had a
confidence?
big impact, to be honest with you. The reluctance of the banks to lend to the consumer, as well as to business, has had a big negative impact on the property market as a whole. The position has improved a little bit, I suppose, over the last 6 months. In that 6 months ago, if you were looking to raise a mortgage, you were looking at probably putting down a 30 to 40% deposit. It's improved slightly in that you're probably looking at a 30 to 20% deposit these days, depending on what price bracket you're operating in and depending on your sort of personal economic profile. But until the banks start lending again, until confidence returns to the banking sector and the property sector, the lack of lending is forever going to be an impediment to the recovery of the market.
And does that make you quite pessimistic about the next few months?
It makes me cautious about the next few months because the drivers to the banks lending again is really the overall economic confidence of the country and indeed globally. So we need to see a global economic recovery, which will then impact UK. We need to then see UK recover and confidence to recover in the UK. And at that point, one hopes that the banks will start lending again. So, yes, that's where we are.
Okay.
Jeff, and I assume you'd agree with that prognosis?
Yeah, yes, I do agree. There is definitely a problem with lending. There has been for some time. The way I'm viewing the situation is that there certainly is a lack of first-time buyers at the bottom end of the market. They are starting to drift through because we've had this market now for the last 3 years. It really started to kick in looking back in September 2007 with the Northern Rock and the banking crisis. As the timeline moves along, what we're finding is certainly first-time buyers are drifting back into the market, and I think within the next year, 18 months, 2 years, more first-time buyers, they've woken up to the fact that they need deposits, they've got to be saving up, and they will start and drift back into the market over a period of time because their savings will increase. I think that the attitude is they realise that they've got to have savings behind them if they want to get onto the property ladder, and that they have been saving up, and as time drifts on, yes, they'll come back into the market.
Okay.
Thank you both. Thanks to Jeff Graham.
And for James Moss, thank you very much.
Thank you.